Hey guys, hope everything's going well. You guys know the drill. Smash the like button, subscribe if you haven't, and comment down below. Alrighty, I wanted to touch base on a topic that I have been thinking about, and I did see this one video by She Collects Cards, and she basically said that if you look at artwork and history in terms of the markets, that artwork tends to hold value during hard recessions for about 100 years, something like that. I don't remember the exact time frame. And this was a study of artwork before the year 2000. I wanted to look though at sports cards though, because sports cards are technically different than art, because art there's only maybe one of that artwork available, while in sports cards there's multiple cards out there. And I like to use the stock market as a barometer. That doesn't mean that whatever happened in the past is going to happen in the future. It just will, give me a heads up to what we can maybe look for in the coming future. So I wanted to look at this one stock, Sotheby. I may be pronouncing it wrong. It's an auction house in London. It's no longer publicly traded, but I remember back in maybe 2014, Jim Chanos, a renowned short seller who hasn't been doing well lately, but he did make some good calls in the past, betting against Enron about 20 years ago. And he came up with this graph. It's not completely correct because he was wrong about what happened in 2014. But if you look at um, this graph over here, so over here, I don't know if you could see, but this was the leverage buyout crash, the LBO in 1990, and that's when the stock price peaked for Sotheby. And if you go to 2000, the .com era, the stock price peaked for Sotheby. And if you want to look at 2007, that's subprime, and the stock price peaked at that moment. And if you look at this, I believe the price was what, $48, and it went to about $10. So that's a huge decrease. And the overall S&P 500 went down about, I don't know, 66%. So the price of Sotheby, which is an auction house, they usually do artwork or weird collectible items there. So it went down, what, close to, yeah, 70%, maybe a little more than that. And that's quite interesting. Now, Sotheby, like I mentioned, isn't publicly traded right now. But you could see that, okay, if Sotheby wasn't making money because less people were buying collectibles or they were paying less for collectibles, it just shows you that, okay, when the prices go bananas, that's probably the best time to sell. And since Sotheby isn't out there, we could look at Collector Core's universe, their stock price. Look at how it pretty much stayed constant over a 20 years period, and then there was a dip last year, and then look at this huge run up before they were bought out. The final price was $91. And sure, people will be like, hey, the stock price went bananas because they were bought out. That's true. But, if you just look at this graph, slight slight movement, and then boom, it just went up like the money supply went up. So what happens when the money supply goes down? And granted, Collectors Universe isn't publicly traded, but it just means that this collectibles market is very fragile. I talk about it time in and time out. Nassim Taleb's concept of fragile versus anti-fragile, and at this moment, the collectibles market is, even though it appears to be very strong, I feel, not I feel, there are many cracks in the foundation. And it just takes perhaps a slowing in the economy, not right now, but in the next maybe 12 to 18 months. It could come in a variety of factors. Inflation could get out of control. Everyone's going out and having fun, and too much inflation is bad for the economy. And also, they may be cutting spending on the government side, so that stimulus will be gone. And right now, the spending increases in the government have helped the economy, short term, that is. But if you have a change in Congress and they say we don't want this much amount of spending, and in the fact that you have a tax hike with inflation, 12 to 18 months from now, I'm not going to be bullish on the stock market. And what do I think about this when it comes to the card market? Once again, I believe we have about 2 years, and that is for the high end market, though. You could see that, the peaks in Sotheby tend to be right around the peak of the stock market here, here, here. And if you look at who's really selling the high end cards, there are some consignment houses on eBay, but the ones that specialize in the high end card market, I believe, is Golden Auctions. And that's one auction house that I really want to monitor closely in terms of the card market, because they have all sorts of celebrities, high end guys bidding on those cards. So if you start to see a huge decrease in card prices throughout the market, then that's a good indication that you don't want to be in there. And the mid-sized cards, or the cards, where a lot of us are playing in, we've definitely seen a correction there. Granted, like I mentioned, there are some decent cards available. However, it's getting much and much harder for everyone to make money. Everyone pretty much playing this game last year made money. I mean, I do see some videos saying that, hey, I lost some money, but for the most part, everyone was making money. Now it's going to be a very selective game. Probably those people with tons and tons of cash, the rich, affluent guys, the celebrities going on Golden Auctions, those cards should hold. Unless if it's like a Jordan or a LeBron card. Those cards peaked most likely in February of this year. But other cards, I think they will still maintain their value. Now, that being said, I want to hear what you guys are thinking about this. One other note, there will be a Topps stock coming out, I believe, in the fall of this year. So Topps is going to become publicly traded once again. And I'd like to see how that stock trades. And I want to see that maybe over a few months and see what the market price is. And sure, Top stocks should be doing well. They're getting into the NFT space as well. But, me as a contrary guy, I think that the top of the card market is going to be very close. When you see these IPOs coming out, not when the market is low, but when the market is high, when it is obviously much easier to get the stock publicly traded, that's when I get very suspicious. That doesn't mean that I will be right in my suspicion. However, I may be thinking about buying put options. I'm not recommending you guys to do that. I may be buying put options in Topps trading cards right around that time, because it may serve as a hedge for some of the cards that I have. So if the card market does continue to go higher, and I have some of my cards that are going up still, they'll be fine. And I'm just hedging my bets, just buying put options, a long dated put option. It's called a leap put. But once again, I'm going to have to reassess the situation at that time. Anyways, guys, let me know what you guys think. Smash the like button, subscribe if you haven't. I'll talk to you another time, guys. Thank you. Bye.